In the first part of this video, I will explain why you end up developing prejudices, ideologies, narratives, and stories instead of real skills to trade successfully. And the second part of this video, I will look at the charts so you understand how technically you can start following real current price today. So stay with us. Our interest and goal is not talking about trading techniques alone, but to help and make people aware of the things that do not have to do with the technical in trading, but that are much more important to understand. Because if not, you will waste too much time on things that are not that important, such as the popular technicalities that you find everywhere. As a beginner trader, you come to this business and try to make sense of what you need to do to make money. One of the main problems is that you are mostly going to be facing and highly prone to see the financial markets with the sense that others have already given before you. If you join a forum or group, or even you're watching YouTube videos and you're looking for basic terminologies, concepts that everyone already mentions, or topics such as what do I need to learn first to invest or trade, or trading tips for beginners, basic and free information from broker referring sites such as Baby Pips, and everything that everyone does initially in automatic. But the reality is that you will have pretty much the same information as everyone else. And if you realize, from there begins the struggle to see who seems to understand better the same dogmas, theories, and concepts already established, and simply, without questioning, you continue searching education based on the same information. What basically you are looking for is who is better in terms of subjectivity, or who can give you a recipe or formula to make money. This prevents you from paying attention to more important and bigger problems than learning or memorizing symbols, algorithms, or theories, or finding a system or winning recipe. One of the main problems as a retail trader is a lack of real information. Therefore, the need to make sense of the markets in order to have any hope of making money brings you to what is known as the narrative fallacy. Because the human being is always prone to constantly deceive himself, building unfounded stories of the past and believe them to be true, and concludes and creates abstract generalizations based on those narratives. Daniel Kahneman, the Nobel Prize winner of economics, also has written about this problem. Giving a story to things provides an oversimplification and coherent response and reasoning to the actions of people. The human being is always ready to interpret the behavior of a trend or reaction and attribute personal traits, that is to say, causes that can match an effect. In other words, correlation and causation. An example of this is the story of J.K. Rowling, author of the Harry Potter book series. Most people know about Harry Potter and the success it had. Understanding the problem of narrative when reading the arguments of the experts and other people describing the success of the Harry Potter series, you can be aware that another problem comes into place, and it's called circular reasoning, where in trying to decipher why the books were successful and still are, the narrative fallacy is used to describe the characteristics already known that are assumed were responsible for a large number of people to like the story, and therefore its success. When people hear these arguments and reasons, they agree with what it is told, as they seem obvious and clear after the fact. But digging a little deeper, it is curious that before these books were successful, J.K. Rowling was rejected by 12 publishing houses until it got published by a publishing house called Bloomsbury, which accepted the book when the owner's daughter said, "Daddy, I love the story." Now think for a moment. If the circular reasoning and narrative of the reasons why the books were successful are so obvious and clear, and we can learn something from them, why 12 publishing houses that rejected J.K. Rowling manuscript could not see those obvious and clear reasons at the time? And it was not until a publishing house whose owner's daughter said, "I love the story," when the books began to succeed. The first thing to understand is that these type of stories have an effect of luck and individual action, and that its characteristics are very particular, and you cannot learn anything about them. Of course, they can be inspiring and motivating, but they do not teach anything, because if I or someone else had an idea of a story for a book and wrote about it and did the same as J.K. Rowling did, it does not guarantee that if I succeed, it will succeed at the same time or scale, or the success will happen similarly or even happen at all. And although I could learn her life and try to be like her and follow what she did and attempted, the factors, circumstances, and individual actions will always be different. That's why you have to be aware that when you attend to these so-called live analysis and weekly projections of the markets, or listen to videos of YouTube where people are talking about the past using words like "here we deduce," "then we can interpret," "this movement or pattern makes us think," "we know that the past gives us a projection of the future," "the market has memory," therefore we assume here we see fulfilled this or that pattern or convergence, here we see decision or indecision, overbought or oversold, balance or imbalance, here we anticipate, we will wait for evidence, and many other truisms that seems to teach you something. You have to be aware that the factors behind the chart in a movement of the past are invisible to all of us, and that the only thing that people automatically are doing is creating a story in their heads, and the people that listen to that story assume that they are learning something from those stories told by others, or even from the stories that they tell themselves. This is why trading becomes very complicated technically and takes too long or never becomes beneficial for you to make money, because you are not developing skills, but instead prejudices, beliefs, narratives, myths, stories with a nickname of education and knowledge. The randomness of the markets is much bigger than people tell you everywhere, because it is largely moved by big participants and many invisible factors. But the narratives make you believe that you somehow can know what has happened, is happening, and will happen. And you think you are learning something, and see the market deterministic and not probabilistic. And with that conditioned mindset, you seek, create, and apply your trading. This is why that foundation of forms and ideas, and therefore narratives, is sandy and changing all the time. And therefore you end up only going in circles. The real trading skills are not interpretations, as most people make you think, but of adaptation. But in order to be able to adapt to something, it has to be specific and unconditional. That's why I talk constantly about principles, because I discovered how with these principles I can detoxify any mind from everything that is taught popularly and from this narrative bias and many other biases. Besides, those principles give the individual the clarity and the specification to only follow the current price, as these principles are neither subjective, nor have form or belief, nor they are based on an ideology, and they are unconditional. Therefore, because they are specific, you no longer need to create more narratives, and they allow you to follow the right side of the chart, the current price. That is to say, the present. If you read the success stories of Google, the success stories of General Sanders, who created Kentucky Fried Chicken, or the story of Ray Kroc, who started McDonald's, or J.K. Rowling, as I mentioned, I want you to be aware that in these stories, there was always a possibility of failure, that touch of luck, and individual action. But when you are aware of what I'm trying to teach you, you will realize that we do not learn anything specific. These stories are just inspiring and motivating regarding abstract things that cannot be repeated, having the expectation of getting the same result. We can talk about perseverance, discipline, hard work, humility, but there's no formula or specification or determinism. So it is the same with trading. People generalize. You hear deterministically narratives. You hear references to symbols and beliefs and abstract things, but nothing specific. And you must understand that this way of facing the markets is not teaching you anything or helping you to develop real trading skills, but the illusion that there is a way to know what is going on behind the charts. Look at these ping pong players. Why are they professionals? Because they have practiced and practiced something. What is that? Hitting the ball with certain position at a certain force, so most of the time the ball passes to the other side of the table and eventually making more points than those that are received. But in the end, where is their main focus? On the ball. And another thing to notice is that the side of the table is not important, but the skill and practice they have developed to follow and hit the ball. There's a difference between the success stories of J.K. Rowling, General Sanders, and Ray Kroc, and the ping pong player. The ping pong player has learned to adjust the strength and movement of his arm and the position of his body to hit the ball whenever this comes towards him. Of course, there were skills in the stories of Harry Potter series, McDonald's, or Kentucky Fried Chicken. But luck played a much larger role in the events of what actually can be described of the events. And the more luck involved in this process, the less the process teaches something. The problem is that so far before, nobody had discovered how to work with limited information efficiently and objectively, because the reality as a retail trader is that we have limited information and most people are not aware of it or do not consider it a problem, and they only create conclusions based on this limited information, as if this limited information is all that there is to know, and therefore disregarding all that much information that we do not know and cannot see, but that exists and is actually more important. So with this limited information, if not aware, we tend to build the best story possible from the information available. And if it seems a good story, we believe in it. The irony is that it is easy to construct a coherent story when you have little information and few pieces of the whole picture, and develop a conviction of it. But the foundation on which this conviction is based upon is in our unlimited ability to ignore our ignorance.
I want you to pay attention to the right side of the chart. In fact, I am going to cover the left side. As you can see, if we leave the last two digits, we have a specific price. Here you can see that every 20 pips we have a number. So there is 00, then 80, then 60, then 40, then 20, then 00 again, and so on. And if I go from south to north, I get the same sequence. The same as if I go from north to south. Now, if I draw a line so I can pay attention to that price, I get these lines. Now, these lines are not supports or resistance levels. They are not based on the past. In other words, they are not based on something that already happened, but in the same prices that are unchangeable and unconditional. And that it doesn't matter like if you go up or down, you always are going to find that same sequence. This is a 15-minute chart. As you can see, I'm marking this same price. Now, if I go from 15 minutes to 5 minutes, as you can see, it's the same price, because at the right side of the chart, the price is always the same. I have the same prices: 0, 0, 80, 60, 40, 20, 0, 0, 80, 60, 40, and so on. The same as if I go up or if I go down, I'm going to have the same sequence, and it's going to be repeated over and over again. Now, if I go from 5 minutes to 1 minute, I have the same information. They are the same prices. Notice that the left side, the forms, the patterns, the candles formations, they change. They have more candles in this time frame that if you go to a 5-minute time frame. But since we're not looking for forms or figures, but we're just looking at price, the information is the same. So coming back to 15 minutes, understanding that I have the same price no matter if I change the time frame. Now let's see if I change the type of chart. If I go from a famous candlestick formation to a bar chart, or if I go from a bar chart to a volumetric chart, or I go back to candlestick formations, but then I change from Japanese candlestick formations to Heikin Hashi mode. As you can see, the information is the same. It's the same price. Now, let's go back a little bit so you understand what I want you to do after you watch this video. Let's observe, now that we agree that the information is the same, so it means that it doesn't change if I change the time frame, it doesn't change if I change the type of chart, it doesn't matter what I think, it doesn't matter what I believe. Even if I go to higher time frames, I'm going to still have the same prices. Now, let's say that the current price is here. So let's assume that the current price is here at this moment. This is just to exemplify and so you understand what I want you to do. Obviously, the current price is here. But at this moment, let's understand what is going on. The most current movement following this sequence, remember, I don't have to see the left side of the chart. I'm going to cover again the left side of the chart. Now I'm just going to concentrate to the most recent movement, which you can see went from north to south or from up down. In other words, it came from 80, it went to 60. Once you're here in the present, there are two possible things that can happen. Understanding that this doesn't change, what are the two things that are possible? That's right. The price can just either go up and change the direction or the sequence, or it can just continue to the next price, right? Remember, it doesn't matter the form. It doesn't matter if this is a U-turn or if an indicator saying something else. As long as you know a specific sequence, the only thing that you're doing is either selling and having a small risk, right? Because your stop is going to be here. Because if it changes, it's going to change the sequence. And it's going to change from going down to now going up. So let's see. The price is there and then goes up. So it changed the sequence. Now, when you're here, now you know that two things can happen. Again, in the present. It doesn't matter what time frame, because we know already that even if I go out to higher time frames or smaller time frames, I'm going to get the same information and the same sequence. So now here I know that the next possible outcomes is either it's going to go up to the next price or it's going to return to the previous price. Now it's doing the same. Doesn't matter if it break this low, or we're not talking about making lower lows and lower highs. We're just looking at the price. And then the price goes to the next price here. Now time how long it takes to move, well, it is going to be always different, as we're going to see in this example, right? This is a fundamental announcement. Now, let's see, just by looking at the sequence that the price took and how it moved faster, but it followed the same sequence. See, the price just went up, then here went down, okay, went to 80, went to 60, almost got here to 40. So the low price is 12.41. So 1 pip, it didn't reach 12.40 because obviously price is literal. So it didn't reach 12.40. But then came 60, almost 40, but didn't reach it. But then let's stay in 60, went up 80, went up 00, went up 20, came back to 00, then went up 20, almost 40, but it stayed in 20, came back to 00, came back to 80, and then from 80 went to 60, then to 40, and then to 20. And then from 20 went to 00 and then to 80. It stopped, went back to 00, then went back to 80, and then continued to 60. Now, and then you can just follow this and then see that the price just is moving, following the same sequence, and no matter what form, this is not waves, by the way. I'm just marking the direction and the sequence that the price is making. The speed is always changing, form is always changing. Therefore, ideologies, beliefs, narratives are always going to change, and it's going to be perceived as different for different people. But when you really are following price, you always have a specific reason to do it. You are going to have this where the market move between these prices. It's just stuck between these prices, but it's moving. But eventually, again, when the price starts moving, today is September 7, tomorrow when Draghi speaks, and if you see this video later and you're going to witness a fundamental announcement, just pay attention, and then you see that the price is just going to move quick, but at the end the current price has to move and reach these prices, because in order for the price to go to 00 has to pass through 20, and in order to go to 80 has to go through 00, and if it goes up, if it is going to go to 00 has to go through 60 and through 80. Understand that you're trading with current information. Now, the important thing here is understanding that there's no correct or incorrect way of doing it. Let's say that instead of every 20 pips, you do every 10 pips. The principle is the same. Here, I have the same. Remember, doesn't matter the time frame. If I change it, I'm going to have the same information. Now, these lines are every 10 pips. When they're every 10 pips, you're going to have this. As you can see, we'll just go to these recent movements. The price went down, went up, went down, went up, went down, went up. As you can see, the price is just moving. In reality, the forms might change, but the price, even that the sequence of prices is different, in reality, if you understand the principle, the price just moved and it went through these prices. It's the same as if I go and if you want to do every 10 pips, it's the same if you want to do every 50 pips. Here I have a 4-hour chart, and every line is every 50 pips. Remember, there's no such thing as correct or incorrect. This is something that you have to understand about this industry. There's no such thing as correct or incorrect, logical or illogical, good or bad. This is only something that is in the mind of those that are narrating something and assuming that something is good or something is bad. But there's no such thing as good or bad. It's just about moving up or moving down. That's all there is. And I want you to choose, right? It says every 50 pips, right? You're going to have this. Goes up, goes down, 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 goes up. If you follow this sequence, two things can happen. Either the price is just going to come back here, or it's just going to go to the next. I want you to choose one of the number of sequences and practice just execution, since that is one of the most important skills in trading. Because no matter how much you know about charts or technical analysis, if you cannot execute when needed, that so-called knowledge won't matter. Of course, there are other important things to consider, like the other principles we teach: time, probabilities, and manipulation, and equity management, which are important to give a more specific and objective context to your entry, to your trade, without being subjective. Then understand, in this business, there's no such thing as a holy grail. And when you pay attention to facts, there's no such thing as correct or wrong approach, because at the end, those facts help you to follow the right side of the chart, which is current price. And trading by something specific, free of forms, and therefore free of ideologies and beliefs, allows you to stay focused and create simple rules and manage your risk specifically. And you do not need to see the past or create a narrative or why it's doing what it's doing. You only act based on facts happening in the present, nor by the past. You only act based on facts happening in the present, neither the past nor the future. And since your actions are based on something objective, it will allow you to develop real trading skills that are measurable, verifiable, progressive, and scalable. Remember, in this case, it is not about finding the best or correct sequence of prices, but how comfortable and how much psychological serenity you have by trading one of them. Because at the end, you are following the ball, like in the ping pong example, or the current price in this case, nothing else. Now, there is a need most people have to see the past, to make sense of the present and project the future. And this is a conditioned mindset imposed by the trading industry. Remember, this is not a specific strategy. There are other principles that complement the whole picture. But if you give this a try and stop thinking and control that need to see the past and only act on these specifics, you will start to see that things just happen with or without you. You will lose, but also you will win. Do not concentrate on winning, but concentrate on executing. The fact is that you are always moving with current information and not with ideas or beliefs. And trust me, for a lot of people, this is a great leap. And maybe, as other people like in our Spanish YouTube channel, you start making money out of just following price this way. Then, I will appreciate if you like and share this video.
When you learn about this so-called price action and other ideologies, ask yourself, are you really looking at price, which is on the right side of the chart? Or are you looking at the idea and belief behind symbols and the scenarios that appear on the left side of the chart? If this video was helpful in any way, please click the like button below, subscribe to our channel for more videos to come, and you can check our website or you can send us an email if you have any question. This is Luis Morelos, and remember, trade with logos, trade with logic. See you later.